All right, let's get started. Good evening, good afternoon, everyone, and welcome to Crypto Pulse Weekly. This is an unusual broadcast because it's not happening at the usual time. And the reason for that is because it's end of the year and there's a lot of activities, and I personally will not be available at the usual time today. So because of that, we need to have Crypto Pulse Weekly at this time. If you missed the original timing and you're not able to catch up with us on live, you can always go to Crypto Pulse Weekly on YouTube, the Crypto Pulse Weekly channel on YouTube, or you could check my Instagram, Dr. Demi Crypto, and you see the video there. So today, I want to fulfill my promise of talking about wallets and how to secure your crypto. I will also give some overall analysis on what has happened in the crypto markets over the course of the year. Like I said, this is an unusual broadcast because I'll not be able to do the broadcast at the usual time today, just because it's end of year. So, to start with, I'll be talking about decentralized wallets. Decentralized wallets are what we call warm wallets or cold wallets. And the reason we call them that is because these are crypto wallets that are not sitting on the exchanges. Any wallet that's sitting on the exchange is as good as your electronic banking, which is like your banking app. The money is not yours. The money is not sitting with you, and if the exchange goes bust, the money is lost. But if your crypto is sitting in a decentralized wallet, or what we call either hot or warm wallets, or even cold wallets, what then happens is, as long as you have what you call the passphrase or the secure credentials of that wallet, you can always retrieve the wallet and you will always have access to your crypto. So I've taken this course, or I've taken this discussion before around wallets. I think that was in 2021. And it was largely talking about the various cadres of wallets. So the centralized exchange wallets, the decentralized exchange wallets, starting from the ones on your phone, or starting from the ones on the browser, like MetaMask browser wallets, like Kepler, like, what's this other one? Give me a second. Tron has a web wallet as well, and quite a number of web wallets. But like I said, web wallets have a problem in that if anybody has access to the computer that web wallet is sitting on, then that person can move. Potentially, that person can empty the accounts. There are some additional security features that have been added now. So things like, passwording the web wallet to make sure that you can't retrieve it. But a very sound hacker will be able to get the password from, getting into the system, either using tools or at the command line level. So web wallet are the least secure. Except, of course, that computer is a secure computer. It's not always online. You don't have to use it all the time. So that's the only instance I would say, you should use a web wallet. And because web wallet also makes it very easy to, send, you can just copy and paste from an exchange wallet on the same system. So it's quite easy. So that's web wallet. The next one is app wallets. I call them app wallet because they reside largely on phones and in some cases on tablets. The app wallets are more secure because except the phones with you can't do anything with the wallet. And many of them do have, either two-factor authentication or authentication to access the wallet and authentication to make transfers. A good number of them, or very common ones, are, of course, again, MetaMask has its own app wallet. Same thing with Crypto.com. Crypto.com app itself is an app wallet. The Binance, sorry, that's the wrong thing. Crypto.com app is an exchange. It's a centralized wallet. But Crypto.com does have an app wallet called Crypto DeFi wallet, something like that. There's SafePal, there's Trust Wallet, there's again, there's Kepler, quite a number of them. But those are the common ones that people use the most. Blockchain.com, yeah, also has both centralized and decentralized wallets within the same app. This kind of wallets allow you to have control on the movement of funds and what happens to the funds. So if, as long as in the case of blockchain, as long as the domain is active, you can access your wallet. And because it's a blockchain-based domain, the wallet is always going to be accessible. For SafePal and for Trust Wallets, those are pretty much decentralized, and they're a bit secure. As long as your phone is secure, those are fine. And I remember mentioning then that you should try as much as possible to have a separate phone that you store your crypto on. It sounds funny, but if you store your crypto on your normal phone, there's a chance that it might get stolen and might get lost, and even if you can't access it, it will be a lot of stress trying to recover and restore the wallet into your new phone. So general advice, have a separate phone, maybe a cheaper phone or an older version of your iPhone where you put your crypto on using these wallets. And these wallets, they have what you call passphrases, usually anywhere between 12 and 24 words that has to be in specific orders. Now, the next question is, how do you store the passphrase? So there's a question of authentication for you to move money or access the wallet itself. Most of them do have authentication, either your phone authentication with your facial ID or signal pattern, depending on whether you use iPhone or Android, or key codes or passcodes. So that's application level authentication that works with the phone. But to take ownership of the wallet, you need the passphrase, or to recreate the wallet on another device, you need the passphrase. And that passphrase is what you call your keys. If you lose the keys, you've lost the wallet. So this passphrase usually helps you to recreate the wallet within the decentralized application wallet. So if my phone got lost, for instance, and I have £100 or $100 of Ethereum on Trust Wallet, I can recreate that Trust Wallet on another phone as long as I have the passphrase. I'll just reference the passphrase, and the application is able to fetch that wallet via the wallet address and then restore the wallet. So to a good extent, app wallets are very secure. The third level, one more thing about app wallet I wanted to say. The app wallets can be hacked. Yes, I was trying to remember one thing I wanted to say about app wallet can be hacked. And the way app wallet can be hacked is just like normal phishing attacks that goes on your email. App wallets can be hacked by phishing attacks, meaning somebody sends you a token from a smart contract. It might be a known token, might be an unknown token, and you suddenly look at your wallet and you see a token that has value. Now, that token might be a DOT token or a phishing token that's tempting you to interact with that token. So what you then do is you go to Uniswap, if you are the greedy type, and you try to swap that token. Maybe it's showing $1,000. Once you try to swap that token, what you are doing is that, because they will have already have a smart contract that holds those tokens as a market maker, as a market making smart contract. So immediately you try to interact with that smart contract, it already takes notes of your wallet address. And depending on how it's configured, the smart contract can ask to authorize access to your wallet. And what will then happen is it will try to run the transaction. It might succeed or it might fail. There are either possibilities, but whichever way, what it then means that that wallet has become compromised, and immediately you should move all your tokens away from that wallet. Otherwise, you wake up one day and everything in that wallet has gone. It's happened to somebody who I consider a more senior fellow in crypto world as early as this year. Actually, it happened this year. So that you need to know about app wallets. You shouldn't interact with smart contracts on wallets that you have all your crypto on. If you have all those smart contracts, or if you find a strange token in your wallet, automatically just move your money away from that wallet and leave the token there. Because what it means is that somebody is sowing a phishing attack seed into your wallet. If you fall for it, you could wipe your account or wipe the tokens in your account. So that's the caveat on App Wallet. Of course, everybody talks about cold storage. Cold storage is the physical wallet like Ledger Nano, like what's the other name? Like SafePal has a cold or a physical storage as well. I can't remember the third guy. They are competitors with Ledger. But I do remember Ledger because I have Ledger. What's this guy's name? I can't remember their name now, but there are quite a number of them, 3 or 4. So the way these ones work is almost similar to the way App Wallets work. The only difference is that it gives you additional layer because it tries to domicile the address of that wallet on the actual device. So usually they're like USB or like small, cards that you can insert into USB drives. So it has the device level authentication, meaning it has a PIN, then it has a password, then it has a passphrase. So the passphrase, of course, is for you to be able to retrieve the address on the blockchain if your physical device ever gets spoiled. So it's not like the money is kept on the device. No, the money never leaves the blockchain. All these devices are just about who has access to that address on the blockchain and who can move money from that address or take ownership of the address. So what the physical device does is it helps you to be able to take ownership of the address, move money on the address, and secures it by multiple layers. So first layer is device level, device has a PIN. Second layer is a password. So it's two-factor at that level. Then that password allows you to connect to an application, usually a web application or a desktop application belonging to that hardware wallet. So for instance, Ledger will have a Ledger application, which is like a small app that looks like a desktop wallet or desktop wallet app. It has its own small application that you can run. That then allows you to connect the physical device to a computer, and then you can move money from that physical device using the app to wherever address you want. This is generally regarded as the safest way because then it's not prone to attack. But the question then is, where do you store the passwords, which is the same issue that happens with both the web wallets and the app wallets. Where do you store the passphrase and how do you store the passphrase? That's the last thing I'm going to talk about in this broadcast. For anybody that's joining online, this is an unusual broadcast because I'm not available this evening. So I just want to do this recording and I'm going to share with the guys in CryptoPulse Weekly group. So what I'm saying is, for all these wallets, you need to store your passphrase. But before we get to storing the passphrase, I wanted to talk about the plus and the minus of hardware wallets. One plus of the hardware wallet is totally off. It takes the access to the address totally offline, meaning you can't send phishing address. Even if you send phishing address to it, you're not going to see it because it's never online. So you're not going to see because the device is never online and it's through the device that you can access that blockchain address. You're never going to be able to do anything on the physical wallet. And you also have the opportunity of being able to carry it around. I mean, you can have $100 million on the physical wallet, and you can walk through custom, and nobody's going to stop you. Meanwhile, you can't walk through any custom in the world with $15,000, especially if they know. I mean, you have to sign so many papers. So that's one of the advantages of having that kind of physical. But because of carrying it around, it carries the constitutional risk of theft, just like anything else. So there have been various suggestions about how you can store. Some people will say, okay, you can store the hardware wallet in a safe deposit box in the bank. You can keep it in the safe in your house. You can bury it in the ground, all sorts of suggestions. But at the end of the day, it gives you complete control and custody of your funds. However, with with significant power, which is control in this case, comes significant responsibility. So the responsibility of taking care of the funds lies only with you. That's the only caveat for that. Otherwise, it's pretty decent way of moving your crypto around. So let's talk about passphrase strategies. A few strategies that I've seen that people have used, and I'll talk about some of the ones I've used before. Simple strategy: just copy everything on a piece of paper or in a particular diary, a particular jotter that you have. That's one. Another one is to put it on Excel. People don't like that because it's accessible online, but you can put it on Excel and encrypt the Excel. The only problem is if you forget your Excel password, you forget the passphrase. But that's another one. Another one is to put it on Excel, then put it on, let's say, Google Drive, and then passwords. So yeah, this is purely IT now, but it's attainable. I've not seen this particular one hack. You put it on Excel. There are tricks. I'm not going to teach that online, but there are tricks on how you can put it on Excel and also encrypt it within Excel. Then, after encrypting the file in Excel, you put it in a zip folder, then encrypt the zip folder, then put the zip folder on a Google Drive, and encrypt the Google Drive. It's about a 3-layer encryption. To take a very smart hacker to be able to break those 3 layers. Another option is to put it on things like Remarkable. So Remarkable is a writing pad. I have one of them. It's a electronic writing pad. You can put it on Remarkable. If your Remarkable is not connected to the cloud, you can put it on Remarkable. But the only problem is if somebody gets hold of it, they can expose it. The other option is also to write it out, then split the coordinates. What do I mean split the coordinates? If you have a 24-word passphrase, and let's say you have a huge amount of money, maybe like 10 million pounds or $10 million on that particular account, you can split the 24 words into 6 words in different orders, and then put them in different locations or keep them at different locations. By the way, that's the way the owner of the Ethereum blockchain, or the founder of the Ethereum blockchain, Vitalik, that's the way he keeps his wallet. So he has some of his passphrase with him, whether in the US. He has one, I think, in Dubai, and he has another one in Canada, something like that. So that's another way to split the passphrase in terms of keeping the passphrase strategies. But generally speaking, if you do have very huge sums of money that you want to keep in crypto, it's advisable that you split it into multiple wallets. So if you have $1 million, it's advisable to split it into like 5 wallets. I see you, Dr. K. I see you, Tony. I see you, to next J. Good afternoon. So as I was saying before you joined, I'm running this session because I'm not around this evening for the normal Crypto Pulse Weekly, and today is the last session for the year. So I'm talking generally about how to secure your crypto and crypto wallets. This video will be available on Instagram and will be available on YouTube channel, Crypto Pulse Weekly. So generally speaking, those are the passphrase strategies that people use. I have some others that can't disclose online, of course. Maybe during the course of next year, I will take a course on how people can encrypt their crypto. The other thing I wanted to talk about is just general assessment of the crypto world and crypto markets this year. It hasn't gone personally to my expectation or to the expectations of most people, because we weren't expecting that the bull run will pick up. I mean, the bear market will pick up so early, but it looked like the market makers already knew what was going on, so they started selling off early before we, the retailers, got a hang of what was going on. And the onset of the quantitative tightening and the war in Ukraine meant that equities markets were going to take a hit, and then the US dollar became stronger. Now, as long as the US dollar is strong, equities markets will be weak. As long as equities markets are weak, crypto markets are weak. In the mind of traditional investors, the people with the biggest funds, crypto is like tech. So in their mind, crypto is technology. So anything that's happening to technology is what's going to happen to crypto. For now, is what's going to happen to crypto. So is crypto dead? No. Is crypto going to zero? No. Is Bitcoin going to zero? No. If you watch my videos in the last 4 months, I've told you the levels at which I think the market will start to consolidate and start to reverse. I've also mentioned that I think the bottom should be in within the next 3 months. I don't think it's in yet. A lot of people think 16K is the bottom. I don't think it's in yet. I think there will be a black swan event that will drive down the price to the region of 11,000, if only for a split second or for an hour before the market starts to consolidate and go back upward. At that point in time, guaranteed, the market will start to make gains month on month or quarter on quarter. But that's not going to happen in isolation to the macroeconomics. And I talked about the macroeconomics over the last few months as well. And the macroeconomics is simple. The value of crypto is inversely proportional to the strength of the US dollar. And why is that? Because the whole of crypto is calibrated against the dollar. Think about it. The value of Bitcoin today is based on its dollar value. That's how we are able to assign an actual value to Bitcoin. It doesn't change the value of one Bitcoin. One Bitcoin is one Bitcoin. The only reason is that because the world spends dollar, we try to derive the value for Bitcoin based on the global currency, quote unquote, which is the US dollar. As the US dollar strengthens, its value in Bitcoin, the value of Bitcoin seems to drop. But when the US dollar weakens, the value of Bitcoin will start to rise. And why is the US dollar strengthening? We talked about it before as well. The government is mopping up all the excess funds that they pumped into the system during the pandemic. And it has made the US bond very strong and the US dollar very attractive. I don't think I should go into the details of that because I've talked about it a number of times. But basically, I can't blame them because they have a job. It's their day job, so and their economics, so they need to provide solution. That's the solution they provided, and they need to work with that solution. So when the pandemic came, they pump money into the system, 25% to be precise, of total supply of dollars. That's too much over the period of 2 years. That's way too much to pump 25% of total supply since the inception of dollar within 2 years. So something has to give. And that's why you have this inflation that I'm shouting about. So to deal with the inflation, they reverse engineer an economic recession by withdrawing funds from the system. Withdrawing funds from the system means that they're buying back the dollar and stopped the issuance of dollar, of free money, or printing money. That effect or that action then has a cascade effect on the stock market because the players in the stock market are always dependent on the government spend and availability of free money. So there is no free money, but the bonds is gaining. So everybody pulls their money out of equities and stock and pulls in government bond because government bonds is completely risk-free. And these people are not, these are people that manage trillions and hundreds of billions of dollars. So we're not talking about small money. So it's easier for them to put their money in bonds than to put it in stock and lose value. Because 1% of 1 trillion, for instance, is what's 1% of 1 trillion? I need some time to calculate that because 1 billion is about yeah, I think 1% of 1 trillion is 1 billion. So think about that. And the US dollar is doing 1.5. So if you have a rate in that region, it's enough for big money because 1% or 3% on such a huge amount of money, completely risk-free, is fine as far as they're concerned. Because what it means is they're not suffering any loss. So if they move the trillion into US bonds, it gives them $1 billion without doing anything, just moving it. Whereas if they kept it in equities, as we've seen in S&P 500 this year, they will have lost some value. So as long as that activity is happening where the Fed is increasing the rate and strengthening the bond market for the US dollar, every other market will suffer. But that is coming to an end because we can see that in the adjustment of the rate hike that the Fed is doing. Once the Fed stops completely in hiking the rates, that point is the watershed for the next bull run, both in the stock market and in the crypto market. And as I've said, I foresee that we might see that turn around over the next quarter. So while this year has been very disappointing across board, I think it provides an opportunity for as they say, not once in a lifetime, maybe, but maybe once in a decade, wealth creation opportunity. And as I've said, don't go and sell your, especially if you have serious crypto like Ethereum, Binance Coin, Bitcoin, of course. And I will say crypto.com, CDC coin. Those are very serious, extremely serious tokens. And the reason they're serious is because not only do they have investment on ground, there's a lot of acreage they covered in terms of their roadmap. I know people talk about, okay, what do you think about, what do you say about FTX? What of FTX? Is this whole thing not a scam? We need to separate FTX from crypto, because FTX is just another fintech company that tried to profit off crypto and rip people off their money. And I think I mentioned this about 5 weeks ago when I was saying the difference between Bitcoin and crypto. And I said Bitcoin is a technological standard that has made the transfer of value, money, and transactions possible across geographies without an independent third party. If I want to trade with Tony, for instance, who's in Canada, I don't need to go to his bank. I don't need to go to my bank. I can just say, you know, what's your blockchain address? And I send whatever I want to send to him. That's it. It also means I can, like I said, I can move $1 billion around in 20 minutes across time and space. So regardless of whether I'm in London or I'm in Australia or I'm in Toronto or I'm in Brazil, it doesn't matter. In 20 minutes, I can move as much funds as I want to move. To move $100,000. Just go. Let me put in perspective. And I'm going to move $100,000 is enough stress. Or let's say to move $1 million, you have to get security to move $1 million. If you put it in Niger terms, for instance, and put it in Naira, $1 million in street value today is about 790 or 700, let's say 750 million Naira. You will need bullion vans with security to move 750 million Naira for sure in Nigeria, because 750 million Naira is at least 4 small Ghana must go of stacks of 1,000 notes. Each thousand note bundle is 100,000. Just think about it for a while. A bundle of 1,000 Naira notes is 100,000. 10 bundles will make $1 million. So 100 million is 100 bundles. Just 100 million alone. 100 million is 100 bundles. And 100 million is just pretty much like $150,000. So think about needing to move $1 billion. If you need to move $1 billion, you need proper setup. But you can move $1 billion. I mean, that's just $1 billion. You can move $1 billion on the blockchain without making any noise, because it's just going to register like any other transaction. So that is the technological advantage that Bitcoin has brought to the world. And that is why there is trouble, partly with all this crypto stuff, because there's a change of power and power structure. And finance is one of the means of control of the government. It's a powerful tool of control, very, very powerful. So to have finance decentralized because of Bitcoin is a major issue. And you know, I keep saying this stuff, but because we're living through it, we don't know how big a deal it is. So Bitcoin is separate in its class. Every other thing is crypto. You can regard this as tech stock, because every other thing that's come after Bitcoin has come as a result of that technology. So if it is Ethereum, Solana, Cardano, every other thing has come as a result of that technology. All of them have their own founders. All of them have, you know, use cases of what they want to do, but they're based on the primary fundamental technology of Bitcoin. So do you want to store value? Do you want to keep real estate digitally? Bitcoin is your choice. Do you want to speculate and make money off, you know, these technological windfalls? Every other thing in crypto gives you that opportunity. But understand that the value of your Bitcoin never change, even if you bought it at $55,000, because in another 3 years, Bitcoin will be over $100,000. And then we'll be looking at $55,000 as, if Bitcoin drops to 5,000, everybody will shout like, "Oh, Bitcoin has dropped like 80%." So understand that. And so it's not like the value of Bitcoin itself intrinsically is changing. It's the calibration in dollars that is changing. And that calibration has to change because the US dollar keeps losing value because the debt profile of the US keeps going up. I don't want to talk about the US debt because I think I might upset some of my US followers. But just understand that we have been born into a great Ponzi scheme. And that's much I will say before I close out for today. We've been born into a great Ponzi scheme. That is, anybody that's been born after 1970 has been born into a great Ponzi scheme in which the government controls the money. They determine how much money they can print, and pretty much determine how the money is used. It's not so strong now on determining how the money is used because it's not completely digital. When it becomes digital, then you know that they can control how the money is used. So because we were brought into a situation where the government can just print money out of thin air. In the 1970s and the 80s, it was a bit difficult because they needed to print notes and they needed to print coins. Now everything is getting electronic. You can use your card, you can use your watch, you can use your phone. So they don't need physical call. I mean, and everybody's trying to go digital. The reason they're trying to go digital is it reduces significantly the cost of producing currency. And currency is not based on anything. It's just based on what the government says it is. So we go to work 9 to 5. Some of us doctors work 80 hours for money that is being printed at will by the government. It's a very sad situation. It's very depressing to think about it, but it also beggars the question that we need to be circumspect and we need to be able to protect ourselves financially and prepare for the future, because whether you like it or not, the government is not going to stop printing money. The whole world, of all the currency in the world, 97% of currency in the world is based on credit, meaning paper money or thin air money that was printed out of nothing. To close, I'll give you an analogy of how money is printed based on credit. So let's say my friend Gbenga here is an accountant. He wants to buy a property worth $1 million. So he goes to the bank and says, "Bank, I have 1.3. I have a property I've seen that's worth $1.3 million, and I have $300,000. Can you give me, a loan for $1 million to buy this property? Maybe it's a hotel or something, or a commercial property." Now, what the bank does is check, okay, can Gbenga pay back? Is he able to pay back? He's able to pay back. Yeah, fine. Does he have good credit? Yeah, credit is fine. Does he look like, valid, legit property? Yes, the property is legit, valuation is right. They go ahead and they create an entry, a ledger entry. It's an accountant, knows what I'm saying. They create a ledger entry for Gbenga in their system for $1 million. That ledger entry shows that, okay, he owes us $1 million, and as a result, the money shows up as credit in his bank account. That's how money is created today. The only other entry that they need to make is to reference the central bank of that country to say, okay, we now have an additional $1 million of credits that we've just created. And if it has not gone beyond the limit for which they are allowed for that period, they don't even need to report it. They've just created $1 million out of thin air into their banking ledger. And that's it, $1 million created. So Gbenga now needs to work his ass off, or you get his business act together to make that $1 million make some money over the years and pay the bank back out of thin air. Pay the bank back the $1 million out of thin air. That's how money is made, or that's how money is created. I've just told you how money is created in today's world. So understanding that, and understanding that the government has literally, they have liberty to increase or downgrade the supply of money at will, is a very sobering fact. And as a result, I'll always be a proponent of crypto, particularly Bitcoin. I'll always be a proponent because democratization of money is the greatest gifts that humanity can have in this century. So that's the end of my broadcast today. I want to say compliments of the seasons to everyone. For all my followers, I wish you Merry Christmas in arrears and Happy New Year in advance. I will see you in the new year. Definitely, the broadcast is not going to take the weekly format in the new year because I have so many things I need to do next year. So, but I will still have, definitely still have videos from time to time and updates from time to time. If you're on YouTube, you can join the YouTube channel, Crypto Pulse Weekly. If you're not already on a WhatsApp group, you can ask to join our WhatsApp group where we share updates from time to time. But apart from that, that will be it for the year. And I wish you all the best in the new year. And have a prosperous 2023 in Jesus' name. Thank you very much, everyone, and have a nice day. Bye.